In this chapter, we'll be discussing about foreign exchange management. That is one other function of RBI. So RBI issues its licenses to banks and other institutions to act as authorized dealers in forex market. Okay. So exchange facility. So whenever you're going for abroad, for travel or holidays, or for attending some business conferences or undertaking studies, okay, higher studies, medical treatment, you need exchange your local currency for international currency, right? So that exchange facility is taking care of the foreign exchange management function of RBI. Now residents can also open foreign currency accounts in India, which means that account will be maintained in foreign currency. So foreign exchange receipts can be credited into that particular account. So you can have in India we can have a foreign currency account. So that account will be containing dollars or euros. So that's a foreign currency account. Okay. So foreign investment comes into India in various forms. I think this we discussed in the earlier chapter about FDI and FII. So RBI has liberalized the provisions related to such investments. Now RBI has permitted foreign investment in almost all sectors, maybe few exceptions. And in many sectors there is no prior approval at all required for non-residents investing in India. And FIIs, that is foreign institutional investors, are allowed to invest in all equity securities. Those are traded in the primary and secondary markets. And also they've been permitted to invest in treasury bills and data securities, mutual funds. And RIs can also have the option of investing with repatriation if they want. Similarly, Indian companies can invest in overseas joint ventures. So there's a lot of liberalization that is taking place, which was not the case prior to 91. Okay. And also Indian companies can borrow instead of from Indian banks. They can raise funds, external commercial borrowings. This also we discussed in earlier chapters. Okay. So buyer's credit, supplier's credit, all this FCCBs, foreign currency convertible bonds, all these are governed by the guidelines of RBI. RBI has permitted resident individuals to freely remit abroad to liberal amount per financial year, any permissible purposes. RBI has been monitoring all this in the domestic and abroad market. So it will intervene if required in the forex market. So this is to manage the forex rate. Say for example, there is a exchange rate of US dollar in India, say $1 is 65 rupees. Usually that is left to the market forces to determine. It will go up and down, but should it fall or increase very much, that will be affecting the economy, RBI will step in and it will do some operations through public sector banks, either by selling or buying foreign currency. Okay, so that also it does. That's one of the functions. RBI is also the custodian of the country's foreign exchange reserves. So it's the custodian. And what does RBI do with these reserves? It invests in either say the BIS, there's a Bank for International Settlements, or it can deposit with foreign commercial banks or some debt instruments. Okay, or any other instruments that are approved by Central Board of RBI. You can also invest in certain type of derivatives. So in interviews they can ask what are some functions RBI does in foreign exchange management and what are some instruments in which RBI invests its reserves.